Yeah, hi guys, welcome to Steam Trades channel. This is my first ever YouTube video, and I'm going to show you two of my favorite characters, but pairs that I love trading. And first of all is GJ, and I'm going to share my entry model on GJ. It's kind of simple. It's kind of simple. We we expect to look for a trending market. It's always a trending market. The trend is a friend. The trend is a friend. So an example of a trade we took, where is it? Over here. It was a loss, but it was a good trade. It was everything I could ever look for in a trade. So it's a bullish market. Let me get rid of this. Hope on the sawa. And what we always look for is a trade that is trending upwards, then retraces back to the 50%, then our entry model hits the W pattern, then we buy, stop loss 15 pips and TP 45 pips, equaling to 1:3 R. And we had everything. Price retraced back to the 50% to the zero point 0.6 level. Had a very bullish engulfing candlestick over here. Let me show you. This was the candle over here. A very bullish engulfing candlestick, engulfing two other red candlesticks. Then a W pattern. Let me show you the W pattern over here. We have one candlestick with a down movement, a bear candlestick, a bull candlestick, two other bear candlestick, then a one engulfing and bullish candlestick, making a W pattern. This is the pattern over here. Ikiweka hapa inaingia vizuri right there. So we wait for a price to retest the neckline, and it has a very big bearish candlestick over here around 14:30. That's 14:30 p.m. Yeah, but it was a loss overall. No mistake done over there, but there no mistake done. Everything was for our entry model. We broke no rules over there, so that's a very genuine loss. Yeah, looking forward to a re-entry of the same thing. Is it really a re-entry? Kama ni trade tu ingine, waiting for price now to pull back to 50%, which is this box over here, the yellow box. Uh, yeah, that yellow box over there. That's the 50%, and we spotted an inducement over here. Inducement in inducement is those early buyers, those new traders who are going to buy from this inducement, because what they see is a sweep of liquidity over here. This liquidity sweep, an Asian low was taken over here, and a bullish impulse like this, like this, like this. So watakuja uchukue the entries from this order block over here. It's a very sweet order block, and what I actually say, if it is too good to be true, it's always not trustable over here. So those guys will be trading, will be buying from this inducement like this, putting the stop losses around, about and around here, the 50%, making this area very liquidated area, becoming a magnet for price to come down over here into the 50%, look for a W pattern, and then we buy. Easy as that, but we actually don't expect it to happen today, maybe tomorrow. Yeah. So this case we're going to buy over here. The stop loss is around here. 20 pips, that's, yeah, 30 pips, that's logically okay. Targeting maybe that at today's Asian high. They might be right, They might be wrong, but we keep uh, doing our thing. The other pair is USD Chef. This is my favorite pair among all of them, and this entry model is quite quite a bit complex. Kwa nini juu it's the same model kama GJ, looking for trending markets, and unfortunately the same trades I'm showing you, I took the miss that Juicy. This was when on Tuesday, and they were both losses. Let me let me let me show you how. This is a BOS to the downside, meaning a continuation of the bear market. We wait for price to pull to the 50% range, and if it pulls to the 50% range, ignore the change of character first. To the 50% range of this pull of this impulse, they have from swing high to swing low. 50%. We wait for liquidity pull and grab at the same time, which is marked as 1 and 2. If we wait for that, and that happens, and then price takes the Asian high, we expect a candlestick to close below the EMA, kama hii hapa, this candlestick, and it is a doji. I will tell you in another video why I take this doji as my entry signal. We sell, stop loss 10 pips, TP 30 pips to totaling to a 3R. We took that trade and we lost it. We lost it over here around Sangapi, around Sanana and 30. We took again the same thing because that's what I believe in. But yeah, we got banned at the heel. But that's my entry model in my USD shift. Maybe I can show a good trade than like this one, but it was a break even, unfortunately. Let me see. What we were looking. Yeah, we were looking for sales. Why were we looking for sales on this trade? This over here. We were looking for sales on this trade because there's a BOS over here. BOS meaning a change of character over here. A break of structure over here. This is a swing high, this is a swing low. And price had pulled back to the 50% range, which is around here. And 1 to 3, which is the liquidity grab, sweep, entry model, had already happened. This is 2, and this is 1 over here. Price took the Asian high. Took the Asian high. What else? Broke below the EMA, and entry model was around over here. Right around there. That was an entry model. And look at that. It was a break even because the 1 to 3 usually happens on near a swing high like this. It always goes to break structure of the swing low right over here. That's the same thing I'm waiting for the sales to the coming week. So yeah, that's all for today. Yeah, goodbye.